management, the Managing Director and CEO of Bank of Baroda, Sanjiv Chadha. It's always a pleasure talking to you. Thank you so much for joining us here on ET Now. Good set of numbers being rewarded by the markets as well. You first tell us, what has been your assessment? Has it lived up to the expectations of the top management and the board?
So I think we have been following a very disciplined strategy over the last few quarters. That has been consisting of making sure that we keep a very tight discipline in terms of the quality of both the deposit growth as well as the asset growth. So if you look at it on the liability side, our deposit growth has come almost entirely by way of current accounts and savings bank. And there's been a very sharp reduction in wholesale deposits. So that has meant that the cost of deposits come down very, very sharply. Our CASA ratio has moved up by nearly 4 percentage points YOY. So I think that's been one part of the story. The second has been that also on the asset side, we have tried to make sure that when we underwrite, it is not only of good quality, but also the kind of returns we are getting are corresponding to the risk. So we have grown aggressively in some segments where we have got our pricing right. For instance, our car loans have moved up 23% YOY. There's been smart growth in gold loans, which is more than 30%. Also personal loans. On the corporate side, we have tried to make sure it's calibrated in a manner where we protect our margins. And we have started seeing some pickup there also. So we had a bit of a degrowth in the first quarter, but the corporate also has grown about 6% Q on Q. So now these two parts, discipline on the credit and the deposit side, has helped protect margins and give us profits. The second part, of course, is we have been guiding that we expect a continued improvement in the corporate credit cycle. And even though there was stress in the first quarter on account of retail and MSME, that should start trending downwards. So we have seen MSME slippages half in the second quarter as compared to the first, and the slippages in retail are about 1/3 as compared to the first quarter. This, along with the improvement in the corporate credit cycle, has meant credit costs are coming down, and that has meant that if you look at the half year, our profits have moved up nearly 4 times from about 800 crores to 3,300 crores. So I think it's a story of pretty tight discipline in terms of executing what we thought was the right strategy for the bank.
I was actually, Mr. Chadha, going to ask you about the flattish growth that we've seen in the corporate loan book, but you've answered that and pretty much highlighted that it was a conscious decision that has been taken. So let's talk about where you have seen growth, which has been in the personal loan book and the retail loan book and autos as well. We see that home loan growth in comparison to personal and auto in particular has been slower, and at a time when we've seen, at least other banks also come out with home loan cuts, the boom in the property market, the comeback of the property market. Why is this a different story at Bank of Baroda?
So our home loan underwriting has been based upon very strict quality standards. We make sure that all our loan pricing is linked to the credit score of the borrower. So what has happened is that in a liquidity surplus situation, there's a lot of pressure on your existing portfolio in terms of refinance. So while our disbursements have been fairly robust, there's been a lot of refinancing pressure on the portfolio, which is why the net growth has been relatively lower. But we are not at all concerned, or you might say worried about the quality of the portfolio. It's very good. And that's not the reason why the growth has been lower. It has been lower because of the refinance pressure, and going ahead, we would expect that also to pick up and be in line with the other segments.
Right. Also wanted to understand about asset quality, how it's shaping up. How is it that you're seeing recoveries, especially when it comes to the retail segment, and whether or not you're seeing any chunky slippages in the corporate book going forward?
So I think we have been guiding for the last few quarters that we expect the improvement in the corporate credit cycle to continue. And therefore, again, for us, that should have a very large impact because of the size of the corporate portfolio. Shrey was something which actually had happened last year. It was only that there was a court stay, so you could not acknowledge it as a NPA, but we were already making provisions there. but the provisions now got transferred again into interest reversals. So that is something which was, you might say, in some ways a story of the last year. But this year we are seeing steady improvement in terms of slippage volumes also, and also in terms of, you might say, pullbacks from slippages which have happened previously. So I'm fairly confident in terms of the corporate credit portfolio. We don't see too many chunky slippages, and the improvement in credit costs on that account should continue.
Right. What we've been seeing, say, suppose for SBI, they're doing pretty exciting things when it comes to their digital app, that's YONO. Is BOB going to, build on similar expectations, BOB World, that is? What kind of traction are you seeing here?
Believe that the mobile phone is going to be the centerpiece when it comes to customer interactions, and the rest of the bank will have to be designed around the mobile phone. So Bob World has been launched taking this kind of concept in view. It is a one-stop shop for everything, for whether you want to open an account, transact, make payments, remittances, shop, invest, everything is possible. It has also been received very well. We have now, as we speak, 13 million customers on Bob World, which must be one of the fastest rollouts possible. It's an application which has been very well received, and we would continue to invest in it to make sure that this is the cutting edge of the bank. The bank actually, again, has a fairly robust technology platform. For 2021, the bank was voted by the IBA as the best technology bank in the large bank category. And this includes both public as well as private sector banks. So we had that base on which we could build Bob World. And I think it as a product and application has come out reasonably well. And we believe we can leverage it very aggressively going forward for the growth of the bank.
All right, Mr. Chadha, always a pleasure listening to you. Thank you so much for taking the time and speaking to ET Now. That's